Everybody's sleeping on Alibaba and especially Alibaba Cloud. So after big tech's earnings, we have enough elements to actually conclude that Alibaba Cloud is going to outperform every analyst's expectation and is going to show very strong growth with very strong AI demand. I'm Eddie from Toko Alpha Mind, and in this video, we are going to deep dive into Alibaba's cloud's real performance that is going to be shown in the next earnings and why we can infer from big tech's earnings that Alibaba Cloud is going to show great growth going forward. So let's get started. So first, before we deep dive into Alibaba's cloud and the Qwen model, so we have to recap what has been happening with the big tech earnings and especially with the three hyperscalers because they have all reported earnings just recently. So we've seen that AWS is growing at 18%, Azure is growing at 39% on the back of strong OpenAI usage, and Google Cloud is actually growing at 32%. So what we can see is actually pretty strong growth in the US and worldwide for these hyperscalers. And this shows that the demand for AI is actually very high. We've seen also with AMD, who has also reported that the demand for AI and demand for inference is actually pretty strong. And not just the growth figures were very impressive, but also the backlog figures shows that there is very strong demand. Actually, Palantir also showed us that a lot of companies have huge expectation with AI and they're going to continue to use AI to actually improve their margin and to become much more efficient. So what does these figures actually tell us? So it tells us that, as we've said, a lot of companies are trying to improve their margin, improve their operations with AI, and that there is a lot of demand. But actually, the reality is that there's also a lot of startups having a lot of needs in terms of compute to actually have all these AI products. And so that's why all these hyperscalers producing and providing the AI infrastructure through a whole new economy that we are seeing this growth and this type of demands, not only for AI chips or AI, I would say, workload, but also for cloud infrastructures. I think that Microsoft also say that with any AI workloads, you have need for compute and you have need for storage as well. So that's why all these hyperscalers, they are benefiting tremendously from the demand in terms of AI and in terms of AI infrastructure. So these are the earnings from the US side, but now we have to actually infer from that what could be the future for Alibaba Cloud. We've seen that in the US, the demand for AI is very strong. And actually in China, we are inferring the same because we are seeing the same type of startups actually popping up in China. And we are also seeing a huge demand for AI in China. So I think that like the easy assumption is that Alibaba Cloud should benefit in the same way as the big tech so in the US. Well, the reality is that it may be a little bit more nuanced because so far we have not seen Alibaba leverage their cloud business as well as AWS, GCP, and Azure. But I really think that going forward with AI, Alibaba Cloud is going to see tremendous demand for their AI services. So we've seen that in the past quarters where they reported triple-digit growth in terms of AI workloads. So this is something which is definitely going to actually drive the Alibaba Cloud business. And as Microsoft says, so with the AI workloads comes a whole lot of demand for other cloud services that Alibaba is going to provide as well. So definitely what we can infer and what we can predict for Alibaba is that growth is going to accelerate. Last quarter, they reported plus 18% in terms of growth year on year. And what we can expect for next quarter is at least 20 to 25% growth because what they explained last time was that there was some holidays that actually was a negative impact on a year-on-year comparison. And so for this quarter, we definitely expect to have at least 20%. And I think that we will see more than 25% growth for Alibaba, given that the AI demand is worldwide pretty strong. And as we've seen with big tech companies in the US, that AI demand translates very well into hyperscale demand. Another reason to corroborate this hypothesis is that what we've seen in the US is that there is a lot of demands coming from AI startups. I think for multiple reasons. First, the most obvious is to power their products. So these startups, they actually use AI in their products, and so they need the infrastructure to run these AI workloads to power their products. But on top of that, what we've seen is that basically today, any startups or every startup is using AI to actually code. And so this is what we've seen with ChatGPT and Anthropic as well. And so like any startups who is actually doing software today is using an AI product to actually accelerate and be more efficient in terms of coding or in terms of software engineering. And so definitely this will also happen for Alibaba, so in China. So they will get a lot of workloads coming from those startups using their Qwen model. So we've seen very recently that, yes, so their Qwen 3 models, the Coder model is actually one of the best in terms of open source models in the planet, actually. And so what we can expect is that a lot of people are going to actually use it on Alibaba Cloud's infrastructure. And so this should definitely power the growth for Alibaba Cloud. So what we've seen, like right now, just to recap, in terms of startups, so we expect startups as well in China to leverage Alibaba Clouds and AI workloads from Alibaba to, one, power their own products, and two, even if they don't have AI products themselves, to actually be more efficient in the way they code and the way they do software engineering. And the reality is that this is going to happen for AI startups or for startups in general, but also for big companies, because what we've seen in the US as well, so anyone today is using those tools to be more efficient. So everyone is trying to use ChatGPT, everyone is trying to use Copilot, Anthropic Code, for example, to basically like be more efficient and be more effective in using these AI tools. And so definitely, like, people are not just going to do that just in the US, they're going to do that in China, and this should translate into Alibaba's growth and Alibaba's earnings, definitely. So first, let's talk a little bit about their Qwen models. And so basically, Alibaba has the leading open source model in terms of coding, in terms of image generation, and in terms of video generation. And so what it tells us is that Alibaba has an elite team in terms of AI models, and that this is going to really support the growth of all the products for Alibaba going forward in China, but also in the Southeast Asia region. But first, let's focus more on these Qwen models and why it's going to supercharge the growth for Alibaba. So basically, these models, they are not only one of the most powerful models in the world, so for coding, so for image generation, and so for video generation, but they're also very cost efficient. And so this is going to drive a lot of attention and a lot of usage from all around the world, and especially from Southeast Asia and other non-US countries. And what does it mean for Alibaba? It means that a lot more people are going to use these models from Alibaba. Alibaba is not going to benefit directly from it, but it also means that it's going to drive a lot more people into Alibaba's AI infrastructures to leverage these products. And because Alibaba is one of the main cloud providers in China and in Asia, is going to benefit tremendously from the usage of these Alibaba's model. And on top of that, we can expect also Alibaba to productionalize these models into some offerings. And the one thing that we can expect is that all of these models and all of these AI, Gen AI tools are going to actually be cascaded into enterprise products first. So actually Alibaba has a big offering for B2B services and a little bit like what Amazon and a little bit like Microsoft has. And so basically what we can expect from Alibaba, especially with like DingTalk, for example, is to cascade and to productionalize all these AI models and all these AI services, which are very cost efficient, into enterprise tools. So one example could be, for example, to use their new Qwen image for any marketing related basically services that they can provide to basically any company in the world. But let's be more specific to China. Every company or every big company in China also has a marketing department, and they also need to produce media and to produce content. And so what we can expect is that the Qwen models are going to be one of the prime choice for any of these companies to actually produce content with AI going forward. And so this should definitely help the enterprise solutions for Alibaba, and this should really place Alibaba as one of the core cloud provider, but also as one of the core B2B service provider in China. And so on top of what we can expect from Alibaba Cloud in China, so the the rate of usage of these Qwen models outside of China is going to also really help Alibaba Cloud to develop and expand outside of China, and more specifically in Southeast Asia. Why? Because now Alibaba is showing that they have one elite AI team and that they can be a really great alternative to all the big tech services in terms of AI and in terms of cloud. And I really think that in many Asian countries, like, we are going to see a growth of usage for Alibaba services, because all of these countries, they want to diversify basically their reliance in terms of cloud. And so Alibaba is actually a great option and also a very cost-effective option. And I think that when people are going to compare, so US big tech offerings and Alibaba's offering, I think that we are going to see Alibaba getting more and more deals going forward in Southeast Asia. So this is something that has been pointed out by Eddie Wu, is that AI is going to permeate into all the products and all the business lines for Alibaba. And what we can expect as well outside of Ali Cloud is that in their main business, so with Taobao, so with their main e-commerce business now, like, they are going to actually benefit tremendously from AI in terms of their targeting ads for merchants. So this is something that we have seen with Amazon, something we have seen with Meta already, that by leveraging AI, they are able to be much more efficient and much more effective in terms of targeting ads for merchants. And Alibaba should also definitely benefit from this type of optimization and this type of improvement in their business for e-commerce. And I think that we are going to see that maybe not next quarter, but going forward in terms of their earnings. Okay, so all these elements, they point out to a massive growth for Alibaba Cloud going forward. And so what we can expect is also that it's going to surprise to the upside compared to what analysts are expecting. And why does it matter for Alibaba? Well, it matters because the valuation today of Alibaba is at 14 forward P ratio, which is actually pretty low, especially if you compare with other hyperscalers. But you will tell me, like, yes, but Alibaba has not shown the type of profit that AWS, Azure, and Google Cloud has actually demonstrated previously, and that Alibaba's business is not as strong as big techs. But I think that going forward, this is what Alibaba is going to demonstrate as well. And the gap between Alibaba and big tech, or US big tech, is going to actually close a little bit. And I think a lot of people are going to be surprised by Alibaba Cloud going forward. And that's what we can expect from next quarter and the following quarters, is a re-rating in terms of valuation for Alibaba Cloud, because people, they are going to realize that the business from Alibaba in terms of AI is at least as strong as what we are seeing in the US. And definitely, like, Alibaba Cloud deserves like very similar valuation, at least for the cloud business, as what we are seeing with AWS, Azure, or Google, because the demand in China and Southeast Asia is at least as strong as what we are doing in the US. People are also worried about the fact that there are some export restrictions that might actually slow down AI in China. But what Alibaba has shown with their Qwen model is that, well, this may have slowed them down before, but today they are still at the top of the game. And what we can expect is that going forward, they're going to become better and better, is that these restrictions today, they may not have any effect on companies like Alibaba. And we are going to see an ecosystem, so in China, which are going to leverage AI without the need from US AI chips, for example. And so this is going to show the world that Alibaba in terms of AI is going to dominate and is going to surprise a lot of people. So what is my takeaway from that? So my takeaway is that next quarter and in the following quarters, we are going to see huge upside and huge earnings beats for Alibaba. At least on the cloud side. On the e-commerce side, it might be a different story. But on the cloud side, we are definitely going to see some surprises and some beats, because analysts are not ready to actually see the contribution of Alibaba and the Qwen models to the Alibaba Cloud business. And so when people realize that the Ali Cloud business is going to actually grow much faster than what they expect and is going to show much more profitability than what they expect, they're going to re-rate it from today 14 forward earnings to maybe something like 20. And so we can definitely expect that Alibaba is going to reach $200 or more by the end of this year or next year. Well, so that's not financial advice. So do your own due diligence. But my takeaway and my own opinion is that Alibaba today is one of the most undervalued company, and Alibaba Cloud is one of the most underrated business in the world today, given the huge demand for AI in all around the world, basically. So if you're interested in other analysis like this one, please check my other videos, please subscribe, and I see you in another one. Bye.